Okay, let me now welcome on board Skandaprasad Seetharaman, the CFO at WABAG, to take cognizance of their earnings. Skanda, good to have you on the show. Firstly, wanted to understand your top and bottom line. They've seen a good growth, but tell me what aided this move, and do you expect the momentum to stay put?
I think we had a very, very strong first quarter, the best in our history, 17% top line growth and 20% PAT, which we call as profitable growth. And we also had a cash back profitable growth. We ended with a net cash positive position over 600 crores. So it was in all a very satisfying quarter. Of course, the drivers were all the new projects that came through, which started getting into execution, and also some of our large marquee projects like Chennai desalination, Bangladesh, 𝐅𝐘𝐬𝐮𝐩, which all were secured in the last year, started getting into engineering and advanced execution phase. We have given a medium-term guidance of 15 to 20% growth. The way the first quarter has panned out in terms of the results and execution, we are confident of achieving and maintaining what we committed to the investors in terms of our medium-term growth.
Sure. The only thing is that your margins remain flat from the past few quarters. And, they've been stuck in that range of 12 to 13%. Is there any scope for margin expansion?
See, if you see, we have guided a 13 to 15% range of margin for the next 3 to 5 years on a medium-term basis. The vectors mainly are higher industrial orders, higher international orders, more O&M, and focusing on EP. So these are the 4 vectors that we have put out even as part of our strategy, and we are pursuing them. We have demonstrated that the EBITDA can increase over the last 4 or 5 years. You have seen how it has moved. And even this quarter, despite having a higher EPC mix, we delivered a 13% EBITDA. So the EBITDA obviously has a scope to improve with more O&M. Our target is to take our O&M to 20% of our revenues consistently, keeping our EP at about 1/3 of our EPC coming from EP projects, keeping our industrial mix over 30% of revenues, and our international mix, you're already seeing it growing. We want to take it to at least 50% and over the years grow more. These are the vectors that will surely take the margins much better than where it is today.
Sure, but also help us understand, you were guiding for that margin range of 12 to 15%, but in the future, is there any scope for expansion beyond that 15% guided range?
If it is there, I'm sure we will unlock those. And we are always looking to improve our margins over years, and this we have demonstrated also. With a 3 to 5 year range, we gave a comfortable 13 to 15% range. But yes, the company is constantly working on both the revenue side, value side, and the cost side with value engineering to keep improving the margins. And we will see as it progresses forward, as and when we see development on these, we'll surely come back. But we are very, very, very confident and comfortable in this 13 to 15% range being delivered over the next 3 to 5 years.
All right, but can you tell us what are the key projects that the company did win in Q1 of FY26?
See, the 2 main orders that we won, one was in Bengaluru in India. These are state-of-the-art reuse facilities, energy efficient ones, a 380 crore order, which is an EPC followed by a long-term O&M. And the other order was in the Kingdom of Saudi Arabia from Saudi Water Authority. We received a letter of award, which is a $272 million order. As you would know, this is an order that we won on retendering. And for us, it was a matter of great pride and belief, which the company stands for. The resilient way, we won back the order. And this is a large order, very landmark order for us, which will be executed over a 30-month period. We are currently under contract negotiation, and early works in terms of engineering and preparations have started. As soon as the contract negotiations are over, contract will be signed, effective date will be announced, and we will start executing the order. But we are already, since we have received the letter of award, we're already started the early works on this order. This will be a landmark order for us, and for us, it is a testament of our competence in the region.
Okay, and Mr. Seetharaman, help us understand what is your outlook for the order book and order inflows we can expect to see. What's the visibility in terms of where your major orders could come from this time?
So in terms of the order book position and order intake position, we have already guided a medium term, which is keeping it over 3x of our revenues. We are already above that, and we will continue to maintain that with a 15 to 20% growth in our revenues. So that is the expectation. You've already seen we have booked close to 2,500, 3,000 crores of orders in the first quarter, and the pipeline is looking very strong. In terms of the regions, WABAG focuses on the emerging economies: India, Middle East, Africa, Africa and Southeast Asia mainly. And from a focus perspective today, we see the international geographies bringing a large quantum. We are already seeing that in the first quarter. The size of orders, the quality of orders, we are expecting the Middle East and Africa region to fire on all cylinders and give us a good amount of orders. Of course, India has also started picking up now, and we are focusing on the rest of the regions also. But largely the international orders will lead the way as we move forward is our expectation.
All right, all eyes on that. But majority of your order intake and order book is in the municipal segment. What opportunities are you seeing in this segment? If you can help us understand more on this.
Water is a social sector. We cannot take the municipal business out of water. 70% of the business is and will remain municipal because the volumes are over there. But when we say municipal, we talk about secured municipal. We don't go for state government orders. We go for orders which are backed by federal government, which are backed by sovereign guarantee, and which are backed by multilateral banks. And the municipal sector, you already see wastewater, desalination, and reuse. This is where a bulk of the orders we expect. You see in Middle East, the order of Yanbu is from a municipal authority. The reuse facility in Bengaluru is from a municipal authority. So we are seeing majority of the orders, and broadly we expect to keep a 70-30 mix between municipal and industrial being 30, municipal being 70. And this will be focused on largely the Middle East, Africa, and India regions. And the product, as I said, in desalination, reuse, and wastewater treatment, which is where we focus on.
Sure. And Mr. Seetharaman, in terms of your impact, in terms of your overseas business, since the company has exposure there and given all the geopolitical tensions we are seeing, has execution been impacted, and how do you see recovery panning out?
See, when the regions that we work in generally are little insulated, I would say, from any of these geopolitical issues. And the kind of business that we are in, we are doing work which impacts society and economies. And we generally don't have such a big impact in terms of geopolitical. If you're talking about tariffs, we have hardly any exposure to the US market, so that doesn't affect us. In fact, some of these also give tailwinds to the sector, because if oil prices go up, then our business also is better because there's more money in the hands of the Middle East customers to invest. And also we have an experience of managing this through various types of hedging wherever it is required. So broadly, we are not affected by this. But in any case, we keep track of these when we do. Our major countries are Saudi Arabia. We are present in North African countries, India, Southeast Asia, CIS, where we largely see that the execution is broadly on target.
All right, with this, we let you go on that, Mr. Seetharaman. Thank you so much for taking the time out and speaking with us. But